Good morning, traders. It is 8 a.m. Chicago time on February 2nd, February 1st, 2022. It is Tuesday. Welcome to the month of February. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Can you give me a sound check, please, and let me know how the sound is coming across? That'd be great. This is episode number 2162. 2162 as we barrel our way to 2200 episodes of the Trader Bite. Imitated but never duplicated. Let's take a look at the Convergent Trading pre-market summary sheet. As you can see, Europe is just on a tear today. The Euro Stoxx 50 up 185 basis points, whereas the DAX is up 160 basis points. That's driven by some decent numbers out of Europe. The inflation rate came in a little higher than expected out of France, came in at 2.9% versus 2.4% consensus. But the unemployment change in Europe was really strong. There was a reduction of unemployment by 48,000 versus expected reduction in 6,000. Big time difference there. Also, Italy announced its unemployment rate at 9% versus 9.2% expected. That's good news. And the Eurozone unemployment rate for December came in at 7% versus 7.1%. Seems to be getting more and more robust. The market continues to be optimistic based on the action. We did talk about this since last Friday morning, I think Friday morning's Trader Bite, where I talked about, hey, this looks like it's about to turn up. And I'm expecting it to push up, and it did so on Friday and again yesterday. The primary scenario worked out yesterday, although farther than expected. For today, we have the U.S. market manufacturing PMI final at 945. The market's going to be paying attention to that. ISM manufacturing also a key number. In fact, it should be in bold here on this. That's the big one. The market manufacturing PMI final is not as important as the ISM manufacturing PMI, so there's a correction there. And then, of course, the JOLTS job openings. This number was very, very low key for years. It didn't even come on the radar until the pandemic. This is a number that tracks how many job openings that are unfilled, and it's at record highs. The expectation is 10.3 million. And of course, this number feeds into the wage inflation, which is sticky. So pay attention to that. So we've got U.S. ISM manufacturing PMI at 10, JOLTS job openings. These two numbers are very important. After the close today, API crude oil stock change at 4:30 p.m. We did get some serious earnings this morning. We had ExxonMobil come in. They beat by 8.47%. Must be nice to have a little boost in crude oil prices for that. The total revenue was way off, down 7%. We had ExxonMobil, we had UPS, a couple of other oil-based companies, Enterprise Products, Imperial Oil, and several others. After the close, the big dog is in play here at Alphabet with its $72 billion of revenue expected or estimated, and $27.32 per share after the close. We also get General Motors, which has $34 billion in revenue expected. Chubb, Starbucks, PayPal, Gilead, AMD, Electronic Arts, and so on and so forth. So some real big players after the close today. As far as where the market stands, we've got the S&P is in balance. It's now got kind of an odd looking profile, more like a multi-distribution profile again, with 223,000 contracts traded. 223,000 sounds high. It is a lot lower than what we've had over the last 2 weeks at this point of the day, and it's just slightly higher than what's expected, which is around 150,000 contracts. So what does that tell us? Why are we tracking how many contracts were traded? It just tells us the amount of activity or positioning that is taking place pre-cash open. The market posture is mixed in the U.S. Again, Europe is kind of a bit of an outlier here. And then we're coming into 35, 36 points of range, which is also seems high, but it's right there. If you look below, a little bit below, you'll see that it says 35.75 is the range, the first standard deviation or the first sigma of range. So this is the edge. 35.75 is right at the edge of what we would consider normal. It triggers blue because it is at the edge. 35.75 or higher is going to trigger blue there to bring our attention to the fact that we have relatively wide range. So we're coming into more volatility. We're seeing the VIX fall. And you know, the VIX has dropped below 25. But we're coming in and we're going to continue, I believe, to get, I believe you'll continue to get volatility and opportunity in this current market. So there's been a lot of that. Of course, opportunity and chances of making money are equaled with the chance of losing it. So the volatility brings more risk as it does more reward, and so on and so forth. So that's where we stand in the overnight session. I want to briefly take a look at what was expected yesterday. Yesterday, I really was looking for this thing to pull back. The 90 is just this beautiful glaring level for the ES to pull back to and use as a base to just throttle forward. So yesterday, I was looking for a push from 90 into the MC point of control at 44.66. What the market actually did is it did not pull back to that 90. It held 44.02. That's about 10 points higher, 12 points higher. So as I tweeted about yesterday, I'm expecting it to push 12 points or more, or a little bit more higher on the upside, which brings us into the 44.85 quarter, which is really important. I highlighted it right there, 44.85 and a quarter. So testing that, as I talked about on yesterday morning, that's a very likely target test area. That's the monthly low for December. And we're at the end of January, and it's the first low that we are likely to check. And we did check it. Here's what we've got in terms of what the market did yesterday morning. We dropped early on right here. We dropped down. We put in a low at 0275. We pushed back up and we held. So I'm going to stretch this a little bit so you can see. I'm not going to spend too much time on this and bore you with the details, but you know, details are where the money's made or lost. So we push through the opening swing high, pull right back into the VWAPs, and then we have these strong. So yesterday was a little bit frustrating. Remember, Friday was very frustrating for me. I was looking for those longs at 42.91 and ended up having to sit out the early portion of the rally because of my 3-strike risk rule. But yesterday, I was looking for those breaks, and then I was looking for pullbacks, and the pullbacks were continuously holding higher by about a point to 2.5 points on the pullback. So it was more difficult for me to put on the trade long with reasonable risk. And so there was an opportunity. There were several opportunities here, key opportunities. One right here didn't quite pull into the cluster back here that I could lean against. One right there is super obvious and painful to look at this morning. Very obvious there. This had no structure to lean against, so it's not valid. Right here, we miss again by about a point and a half or so, and so on and so forth. But it was clear. What was clear yesterday is long and strong. Long and strong. Did not want to get short at all yesterday, and definitely wanted to target that 44.66 area right there. So that we ended up at 63. We pulled back. We held the entire day. We held above the RTH and full session VWAPs. There was no reason to get short yesterday for structure. There were reasons to get short for scalps, which is very reasonable. The NASDAQ was much more forgiving, as crazy and frantic as that market is, was much more forgiving on the short scalp side. And then in the afternoon, we had this beautiful pullback to this entire box structure here. Lots and lots and lots to lean against. That's the word I like to use, just something to put your back against as you push in a direction. Very important for my trading to identify an area to lean against, to identify that risk before we start counting how much money we're going to make. So always define risk and how far you're willing to go, or how much money you're willing to pay for that token to put into the machine to see if your trade is a winner. 50-50 chances. So right here, this represents a very good stable area. The IB plus this box to the left gives us the long into the close, and in this situation really wasn't looking for much more than a push back into that 85 that I talked about earlier, the monthly low, and then the rest was all gravy into the close. The point of control, you notice the point of control is right up there with settlement yesterday. The point of control in the S&P was at 45.05 quarter. The settlement is at 45.04 quarter. This fact it tells us that the S&P had what was a multi-distribution, thinly traded, and basically single-sided, essentially a trend day yesterday. What this tells us, with the point of control at the high structurally, which we don't see in our, candlestick chart with just moving averages on it. We only see this as part of our volume profile, and this is why I'm a huge proponent since 2006 or so. Huge proponent of volume profiling. I started looking at market profiling 2005 and have been pushing volume profiling on anybody that's willing to listen, and now it's become a popular way to look at the market. But you look at the volume profile and it's got no value. It's got no consensus yesterday, none whatsoever. You could see there are multi-distributions throughout the profile, throughout the length of the profile, and the point of control is at the high with settlement. And what this tells us is there's a lot of interest and higher and higher and higher in prices. There is no excess. The market did not successfully find sellers as it advertised prices higher. With that being said, we expected to make continued highs in the overnight session, which it did. The overnight high is higher, and the expectation, and look at where it's settled here on the profile. This is another old MC point of control or high volume node, actually. Now in the composite, it's settled right on top. It's temporarily accepting this area as value, but really it did not establish very good value up here, and we expect the market to continue to actively pursue higher prices with a weak high. So this profile yesterday is just totally incomplete. The auction is incomplete. We expect it to continue. The delta, quite strong on the buy side, held the buy side all day long, relatively aggressive buyers, and that's where we are. Coming into today's session, let's clean this up. This is a 30-minute here. Coming into today's session, you can see the dark shaded area, by the way, that's RTH. The light shaded area, the light gray, is the extended trading hours. And you could see that we definitely took out yesterday's high and we moved into and above the 45.11 area. The 45.11 area is the MC point of control in this area. It is the most accepted price in this area. We'll put in a high at about 14. At about 14 and 14 and a half or so in the overnight session. Yeah, it looks like 14 and a half is still the overnight high. So the overnight session has held on to this upper distribution from yesterday against this high volume node area. See that? See this high volume node area here? The overnight session held this area. We're looking at balance here. So what the heck is this guy saying? What am I saying? What does it mean to your trading? It's not just some theoretical crap. We're talking about actionable information here. And what's actionable about this information is that we expect this morning, given the mediocre volume, given the wide range, given where we are landing here, given that we are just basically on top of yesterday's settlement, on top of yesterday's point of control, on top of the high volume node in this area. You know what? I'll let you answer. If you're on Twitter, you can tweet at me. But if you're on YouTube, tell me what you expect. What do you expect? This is a pop quiz this morning. I'm going to pop quiz you all this morning and ask you, what do you expect? What does this mean as we come in, right? What expectations should you have as the market opens and starts fluttering around? Should we be aggressive on the open today? Is there a reason for us to be aggressive on the open today? What do you expect? Yeah, I don't know about it going down, but a lot of you have been listening, and I really appreciate seeing that my effort is paying off. We expect an open auction. We expect a choppy open, a wide chop, given our overnight range is right there, just inside of one standard deviation. Given the volume is relatively normal, it's also within one standard deviation. We expect a choppy open. We expect two-way discovery. We already took out the overnight high. The trend is up. We broke the weekly high from last week. So the down, the one-time framing down, or the trend down, as it's commonly known in the weekly, has been broken. So things are pushing to the long side. So just have that in the back of your mind. But immediately, we see that the market is in a holding pattern. It's circling the airport right now, looking for the next piece of information from the control tower below to tell it where it's authorized to move next, so to speak, to use the analogy of a commercial flight coming in for a landing. So that's where we are. And so I'm glad that most of you are expecting balance and looking for chop. Chop leads to a continuation. I don't know if the continuation will happen given the chop from the overnight session. Nobody can tell you that. I don't believe this is likely to turn lower. What news is there that's going to cause this to revalue lower? We've only just tested the prior month's low, so we are just inside of the prior month's range. We didn't reject the prior month's range. If we came in yesterday, we pushed 44.85 quarter into 90, into 4,500, into 45.04, where we closed, and then we start to slump and fall out of the prior month's range, I'm with you that that's a pretty weak close, and it's likely to explore lower. And in that situation, we're looking for it to move back to 44. As you see on the chart here, right here, these are your bases, 25, 22. It's so simple, right? It's so simple. This process is very simple of detecting what the market is trying to do. We're not trying to predict the future. We're simply seeing what is it doing and placing a bet based on what is the next rotation in our time frame. Whether you're a swing trader or a day trader or a scalper, that's essentially what we're doing. The amount of information we incorporate can cause complications, but overall, the market is a very simple thing, right? It's just like water. You can pretty much predict or see what it has done and what it's likely to do, and we're basically setting a bet on what path it could take next. So, with that being said, and with your answers, I guess my work is done here, and I'll say goodbye and leave you to it. But actually, we are holding this pattern here, so please, coming in today, don't sit here and expect directional or breakout moves, as the market has been quite hawkish as to reflect the Fed's position. The bonds, the notes disagree with the Fed currently. The supply issues seem to be easing, and those ISM manufacturing numbers are going to be very important, and the JOLTS job numbers are likely to be the catalyst. So I expect the open all the way to 10 a.m. Eastern to be relatively kind of testing and chopping back and forth, whipsawy, and then we're likely to take more of a direction once those numbers come out, because that's the next piece of input that we have coming into the market. Okay, so that's that. Let's move on to what's expected for the day, and let you all just go and get ready to trade. So here's what we've got. I'm going to use 2 standard deviations for distance. Here's what's expected for today. I'm expecting, as you guys said, we are right on top of, we're sitting pretty right on top, right around yesterday's high, yesterday's settlement. We do have VWAP in mid just beneath us. I'm expecting us to chop in between the prior settlement, the overnight point of control at 44.92. So we're opening in a very turbulent area. The 4,500 is a century figure, a major strike price. There's likely to be some hedging and stuff going into this Friday's expirations. So I'm expecting us to chop around here and then finally take a dip towards some of yesterday's range, potentially to the 80, down here, 78 is where I expect the extent of the base to be. And then I'm looking for this thing to try to break out of this area and start moving towards this 36 single prints, and then for it to fall back towards this acceptance area. This is kind of a magnet area. This area has some gravity. Depending on what the ISM does, I expect the market to be caught in the gravitational pull of this 4510, 4500 zone. So 80 to about 35, 50 points of range. That's pretty decent. Not expecting the market to do much more than that. The secondary scenario, so I'm looking for the IB high to break for our overnight stat. The secondary, break the IB high immediately, push into that 45.28 is a former all-time high, 45.28, and then the swing low at from December 20th right here at 45.20. So 20, 20, 28. Okay. Push above, then falter, and then start to take back some of the action from yesterday. And where am I expecting it to go? Right down here, this stock zone at 65 or so. 65, 60. And then still consolidate and finish somewhere in this area. So today is expected to be, after Friday's run, Monday's run, yesterday's run, I'm expecting this to be a resting day unless some news comes out and hits the tape. I'm out of time. This has been very long, 26 minutes. I hope you got a bit of a crash course reminder or whatever on how the market truly works. It is an auction, people. So then layer in all your fibs and moving averages and Elliott wave and all that stuff. But the fact is the market is an auction between aggressor buyers and sellers based on their future expectations of the price action now, whether macro or technical analysis. That's what it is. If you instill yourself in the idea that this is an auction and start to learn how auctions work, I believe you'll have a good base. Good luck.